Holy smokes, everyone. The trade deal between the world's two superpowers has just ended, and there is no sign of renewal as the tensions between the two empires increase. So everyone, this is a massive developing story, so let's not waste any time. Let's get straight into the news, the facts, and the data. So for those of you that don't know or don't remember, in 2018 and 2019, there was a lot of uncertainty in the markets as the trade war was intensifying between the US and China. But we've just got data and we've just got news that China has fell way short of its obligations in that deal. Under the so-called Phase 1 trade deal signed in January 2020, China agreed to increase its purchases of US goods and services by 200 billion over 2017 levels during a 2-year period ending Friday, with specific targets set for manufacturing goods, farm products, services, and energy. But this is what's now happening, everyone. Beijing fell short on trade deal promises, creating dilemma for the Biden administration. So China missed targets for buying US goods, but retaliating could come at a cost to American companies and consumers. So this is massive, everyone, and really this is a hard situation because if the US punishes China by raising tariffs, well, what are we having right now? Record inflation, and that's going to make the record inflation worse. Also, there are a lot of companies trying to invest in China, like for example Apple and Tesla, and this will also hurt US companies because all the US companies want to get into the China's market because it is the second biggest market in the world, and eventually with their population so huge, it will become the biggest. So all these major companies in America are kind of looking over the issues that are going on in China for more profits. And I'll get into later in the video how this could have a big effect in the markets like what it did in 2018 and 2019. But also the other issue is if the Biden administration doesn't do anything, this could be a message to China to say that there won't be any consequences and they continue to get away with not living up to their obligations. So let's have a look to see exactly how much they fell short, everyone. Based on trade data through to November, China was 17% short on its agricultural goal, 41% short on the manufacturing goal, and a massive 62% short on the energy goal. This is far beyond the ability of last-minute deals to fill the gap in the window specified by the agreement. Data for services trade isn't available on a monthly basis, but annual data showed a 32% drop in US service exports to China for 2020 as well. The deal includes a dispute resolution mechanism that Mr. Biden could use to compel China to make additional purchases. But of course, this will bring huge consequences for the US economy, for US consumers and US companies. Raising tariffs would increase costs to US companies that import China's goods such as clothing, electronics. Those companies pay the tariffs and often pass on the higher costs to the US consumers. So what we're really seeing is a perfect storm for inflation right now. We got the money printer going burr. We've got the massive supply chain issues. We've got shortages everywhere. And if these tariffs get added on, well, then that's going to make the inflation problem even worse. And how this would have a big effect on the markets is that means inflation is going to be much worse than the Federal Reserve thought, and they're going to have to lift interest rates much higher than they expected. Something that is quite worrying and something that they didn't fall short on was buying up huge amount of US farmland. And like I did the video yesterday, they're also buying up massive amounts of the food supply. So with farm products in particular, China has ramped up US purchases, helping to bolster prices for American farmers who have been hit hard by falling prices during the US-China trade war. So yes, this is good for farmers in the short term, but in the long term, this is bad. And I don't think we really want to continue to sell off assets that are producing goods and services instead of just relying on producing fiat currency. But unfortunately, what's happening in the West at record pace is they're selling all their assets to China. And once they have all these assets, they'll have a huge advantage over everyone else. And have you seen how high beef, pork, and poultry prices are going up? I've definitely noticed at the supermarket that meat prices are going up through the roof. And really, red meat is becoming a luxury item that the middle class can't afford to eat very often. So for manufacturing goods, China pledged to buy 210 billion in the 2-year period. As of November, it only brought 117 billion. But the biggest miss of all was in energy, such as crude oil and natural gas. The trade deal called for China to purchase 67 billion as of November. It had brought only 24 billion, on pace to fulfill just 37% of the target. Now again, going back to why this trade deal started in the first place, the Trump administration tried a tact saying a tougher stance was needed given China's use of government subsidies to allow strategic industries to undercut American competitors. Its tolerance for intellectual property theft and its complex barriers to prevent foreign competitors from gaining a foothold in many industries. That stance included new tariffs on Chinese imports in 2018, which eventually climbed to nearly $370 billion worth of goods. The 2020 trade deal was in some respects simply a ceasefire, as most tariffs remain in effect. But you're probably wanting to know, okay, well, what does this mean in simple terms? What this means is, right when tensions between the US and China are escalating, things are only going to get worse. Right when inflation is at record highs and there's so much uncertainty with the future, we could see more inflation come if they start adding tariffs after tariffs. And unfortunately, we, the people and the consumers, are the one that are going to bear the consequences of this. And going back to how this will affect the markets and what you're probably wanting to know, I remember in 2018 and 2019, this caused a lot of uncertainty because, again, China is the second biggest market in the world, and a lot of companies make a lot of revenue from China. But if escalations continue to rise, saw what happened in 2021, there was a crackdown on everything in China. There was a crackdown on tech, private tutoring, gaming, celebrities and influencers. And really what the worst case scenario would be is if China kicked out these companies altogether. So everyone, this is a massive developing story. What do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. I'll put up some other videos here. I'll see you there.